All right, all right. Looks like I am live. I think I got YouTube live, Facebook live, and Twitter live. So if you guys are seeing this, make sure you hit the thumbs up, share, comment, retweet, whatever you need to do. So I'm going to do the Bitcoin analysis and crypto analysis first, and then we'll have Faisal join in, and he will cover the stock market analysis, and we'll have a discussion on that. All right. So let's get started. All right. Basically, what we see on Bitcoin right now is, again, this kind of toppy behavior that we've been seeing for the past day or two. We actually took some scalp trades here in the long side, but unfortunately, I got stopped out twice, actually. So then after that, I kind of just stuck to my swing short position, which I've been in since like 2, 3 weeks now. Um, you know, I think way the heck over here, even when people got bullish on this push back up, when we went to almost $10,000, I reshorted, added onto my position. So my short average is right around 97.41. I closed half of my short a couple days back, right around 9,400, because I thought that we were going to consolidate up here, push higher. So I figured, you know what, I'll close at least half my position just in case we do push up. And that didn't happen. We kind of pushed down again. So I'm probably going to reload on my short position and probably ride this thing down further. So if you're thinking about exactly where I'm targeting, if you watched my morning analysis, I stated before that if you look at this key area right here, this pivot, okay, and this is a 4-hour chart. Once we started to climb above this pivot, and let me zoom into this a little bit more so you can see a little bit closer, okay? Once we started to get closer towards the pivot and we started consolidating above it, you can see we tried to push up, got closed back down under, push up again, close back down under. And so what this kind of told me was it doesn't really seem like we're going to press any higher, more than likely. I just needed to see a nice strong break of the 4-hour time frame below this pivot. And this is where I told my Advantage community members, this is probably the best area to, again, reload on your short if you haven't shorted already. Okay. So this is where we are, right? Nice 4-hour strong close below. This was, I think, around 11 a.m. this morning. And then another follow through candle. This is exactly what I want to see. Okay. So for the most part, I'm expecting more downside now. I don't see anything else holding us up here. This is probably, in my opinion, a temporary stop right here. I don't see us maybe going further than this pivot. To be honest, I'd probably figure maybe stop over here and then start rolling back over. And if I'm targeting to the downside, my short targets, I'm at least looking towards the S1. Maybe this could create like a double bottom kind of thing like that. I don't know if that's going to happen because this key S1, it only propelled us towards the pivot for like a day, day and a half, and now we're breaking down again. So I'm thinking to myself, well, was this support down here really that strong, right? Because if we only spent maybe a couple of days only reaching up a few $100s, well, why is it that if we come back down here again, we push up any higher? And this is also still in large part in a big downtrend channel resistance, right? You could see right here, after we put in this high, we put in this low, lower high, lower low, another lower high, another lower low. So I'm thinking at least we get to S1 and possibly we get towards the S2, which is around 85.50 or so. And if you're simply looking at this from the standpoint of high volume nodes, which again, I've stated that these nodes right here on the right, they're important because it helps you identify where exactly a lot of the volume has been transacted in terms of big players. Well, a lot of that volume has been transacted up here, right? Right around 95.50 or so. And you could see we actually got rejected right there. So if we're not getting acceptance back above that high volume node, that means the big players are not there to drive up the price. In fact, it's quite the opposite, which is the big players are here to set up a selling opportunity. And if they sell right here in this area, that means we're probably going to catch support in the next big high volume node, which is at least this area right here, which is this high volume node. And that's around 88.50 or so, which again, matches right there around the S1. All right. So we got a lot of interesting stuff happening in terms of Bitcoin. Do I think it's going to press up higher? Well, as I've said before, I think a lot needs to happen before we can start talking about higher prices. Number one being this descending trend line resistance right here, this trending support, or I'm sorry, this trending resistance, this block right here. This needs to break, and then we can start talking about this block up here. Let me change the color on this so you guys can see a little bit more clearly. Because this area right here, it's important because we consolidated here a week or two ago, right? Beginning of June, right there, before we broke down. This was when we had that big spike up to 10,400 before we rolled over. So it makes sense that if we do press out of this descending channel right here, if we do, we'd probably reach up there because that's the last area that we consolidated before we rolled over, put in another lower high before we rolled over again. And so where I am right now with that position is I'm very comfortable. I'm very comfortable shorting. I'm very comfortable sitting in my short position thinking that, okay, well, we couldn't break above the pivot, couldn't hold. We broke below this high volume node and we got rejected. Most likely we're headed towards S1 and possibly this range low around S2. Now, on the daily chart, actually, we could even look at it simply from the 6-hour time frame, right? This is a pretty easy way to look at a chart where you could see right here, everybody was talking about this trend line resistance, okay? Even that, you could see once we broke down below that, we tried to climb back up here, right? As you can see, we broke down below, tried to climb back up again, got rejected and got sent back under. So the fact that we're doing that, we're not able to climb above this trend line means that there are some decent sellers lined up. Now, it doesn't mean that, the sellers are just constantly watching this trend line. Remember, when it comes to technicals like this, these technicals line up because there are horizontal levels, there are fib levels, there are moving averages, there are other things that are of confluence that just so happen to match up in this area. This is why you see trend line movements like this, right? When price keeps hitting a trend line like this and it keeps bouncing up and off of it, well, that's because other professionals, other algos are watching trend lines, other technical aspects of the price, and they're either defending their price or once it's broken, they're either selling that price, right? So this is the same thing that's happening. We've broken past the key support area. And if that's done, well, the sellers are going to step up and say, all right, well, it looks like the bears are clearly, the bears clearly had the upper hand. So I'm going to join in on the fight with the bears. And I'm going to sell my asset and possibly short. And so if that's the case, what you have is momentum shifting towards the side of the bears. And this could possibly keep heading down lower and lower. All right. Let me see here. Let me see if there's any questions lined up for me. What's going on, Daniel? Handsome man. Johnny B, how's it going? How's everyone doing today? Yeah, I appreciate you guys joining and watching the analysis. Make sure you hit the thumbs up while you guys are watching this analysis or retweet it. And so, we're on this daily chart, right? And I also explained again in this morning's video, okay? Once we had this big drop down, you can see the reverse move back up has just been this grinding movement. And I even stated over here on this big candle, this is where I reshorted my position. Okay, if you don't believe me, you can see right here, I showed you guys that when we had this big spike up on, was it like, I don't know, 10th of May or 8th of May, something like that. I said that more than likely this was probably going to get sold off, right? And so that's pretty much what happened right here. So I reshorted on this candle and then boom, lo and behold, the next day we got a pretty big sell-off. And the same thing is again happening again. When you get this grinding movement back up, right? And if you're not clearing any significant resistance level, chances are you're probably going to get sent down again. Now, on my Twitter feed, I had explained that on Deribit, right? So let's check out Twitter, I mentioned that on Deribit, there's a good amount of options contracts expiring at the end of this month. And I also dug into the options contracts. A lot of them were put options on Deribit as well as the CME contracts. Okay. So if we're thinking that the end of this month is also the quarterly end, we also have had a pretty massive, movement to the upside all in May and June. And if this is all the distribution phase, and we have options that are showing us that the data is more so pointed towards the put side, but we have enough evidence to at least be hedged or at least, be cautiously bullish, or like myself, you could be short. And so I've been talking about being short for the last, month and a half in Bitcoin, and in reality, nothing has really changed. I even talked about this crypto quant data. I did a interview with Ki Young Zhu. He's the the CEO of Crypto Quant, which is this on-chain metrics data right here. And we spoke about how exactly would you be able to read the data for us as traders and investors to make useful trading decisions. Well, the one conclusion that we simply came to is when you start seeing inflows come up, meaning as you can see these red spikes at the bottom, this is big professionals and big players moving their Bitcoin onto the exchange. And so if they're moving their Bitcoin onto the exchange, they're not really doing anything else with it other than looking to sell. And so I want to show you guys pretty much in real time. This is pretty much this morning and yesterday evening. You can see from this morning, we had 2,474 Bitcoin moved onto some of the exchanges. And then again, right there, 1,395. And then again, right there, we had 1,928. And then again, right there, 1,043. The one conclusion that we came to is that if you pay attention to movements of Bitcoin 1,000 and up, those are typically the big players that can have a decent impact on the price. And so you could see once we start seeing this inflow of Bitcoin come onto the exchange right there, right there, right there, and right there, you then start to see price basically start slumping over, right? You can see price right there, it just started to roll over. So you can see you could definitely give a lot of credence to this kind of information data because it's very useful. When you see this kind of magnitude of Bitcoin coming onto an exchange, it's time to be cautious. And for the most part, this is where things get interesting. For the most part, we've pretty much been doing that since May or all the way through June. These big spikes that you see, spike right there, spike right there, spike right there. All these big inflows that you're seeing, this is exactly what we're seeing in our technical analysis, right? It's distribution happening right at the top of the range where you see a good amount of volume come in right at the top. You don't like to see volume come in right at the top because that implies sellers are still selling. And again, the data backs it up. Okay, let me see if there's any other questions. Let me see, Johnny B, as soon as SPX got a red candle, BTC started to dump without mercy. Yeah, I think Bitcoin was already dumping or on its way to dump, but you're right, the S&P 500 saw a bit of a red day today. So I think I got Faisal on this call. So Faisal and I are going to discuss what happened in the stock market and how that, maybe translate over to Bitcoin. So Faisal, what's going on?
Not much, man. Great to be here.
Yeah, good having you. So heck of a day in the markets, man. What do you got for us?
Yeah, man. It's been a couple of choppy days. I've been expecting at least some type of big move. Not related to not to the degree that we saw last week where we got that 1,800 point drop, but there's definitely some volatility brewing within the market. It's been extremely choppy to the downside then to the upside. From when we had that one day a couple of days ago where the futures were down 1,000 points, only for the market to recover pretty much everything, and then at one point during the I think yesterday when the infrastructure news came out, or it was 2 days ago, the market had opened extremely high and then sold back down fairly fast, only to bounce up a little bit towards the end of the day. It's just been a very wishy-washy market in my opinion, but I'll tell you guys something. The move that we saw towards the end, it didn't really it didn't really raise any warning flags for me as far as like, okay, that's the start of the downside. But tomorrow, I think it sets up perfectly. Tomorrow is going to be a very, very, very interesting day. And I don't know if the slide that we saw towards the end means that it's probably going to be to the downside, but I'm just based on everything that I saw today, where my leadership stocks closed, just how the market reacted towards the end. Tomorrow is going to be an extremely big day. And if you guys have been following my portfolio, I'm pretty neutral right now. I have some shorts, some longs, but for the most part, tomorrow will be the day that I'm planning on either covering my shorts and going more net long, or selling my longs even more and going more net short. So I just think that's a very big, just based on my short-term technicals, that's what I'm predicting for tomorrow.
Yeah, and that's a great point because I think the one thing that you and I do pretty well in our community is we outline exactly what our game plan is from day to day, week to week. And so people can see your thoughts and my thoughts of how we're looking at the market, what we're looking to long or short, how at what point we're looking to cover our positions or add on to our positions. So, and I'm really glad. I think this kind of detail helps our viewers, our members, to see, the insight that we provide on a day to day basis, because it gets really hard. You're talking about the choppiness of the market, right? Like in any given day, I mean, I think a person's mind goes from, buying to selling at least like 100 times a day. You know,
Yeah,
um,
no, especially in this market, it's extremely tough. I mean, I'm not gonna try and act like I know everything, because there are definitely times where I get it wrong. But um, for the most part, the market is very mechanical in its choppiness, and so if you are able to dissect the market very well, like usually within the first 30 minutes, I can kind of tell what the market's going to do throughout the day. Um, and so it'll usually play towards a daily range, or maybe a daily support level as far as the indexes or the leadership stocks are concerned. But yeah, it's really a market environment that'll give you opportunities on the short side. It'll give you opportunities on the long side. Like for instance, right now I'm short a lot of the bailout stocks. Like I'm short airlines. I got into it 2 days ago, into Southwest, and I got into, I think, Las Vegas Sands a couple days before that. So I'm predicting those stocks are going to be the main ones to lead to the downside, and that's not because I think the Robinhood guys are going to get crushed. I just based on my own technical formula, I think these stocks can pull down, maybe 10 or 15% before they may start to go back up. But on the long side, I think if you guys have been listening to me, I've been telling y'all, buy these coronavirus names, like the gaming stocks. Man, I got into Activision and Take Two about 2 weeks ago, and they've both done awesome. I think Activision was up 4% today, and it just broke out. So I got into that. I want to say I put out an alert at 69.60. I want to say, and so far I'm just planning on writing out those types of names, and definitely the software names. If you guys listened to me during the video Sunday, I was mentioning Blackline and Avalara, sorry, and both those stocks have been up 8 to 9% this week. It's been an awesome run for the software names. Um, so, like I said, this market is going to give you very specific opportunities, and you can make great money that you're seeing people talk about. With the airlines going up and everything, you don't have to basically put all your money into most volatile sectors, risky sectors, in order to get significant yield. I think we've been touching on that for a good couple weeks now. So I think
yeah.
the market itself at this point still is healthy, but once again, tomorrow is going to be the big day.
Yeah, and that's a very interesting point that you bring up, because I think a lot of people, when they go into a market, I think the first thing that comes to their mind is, how can I make the fastest amount of money, in the shortest amount of time? And that often leads to either playing with instruments like options or futures or leverage trading positions that cause you more and more losses. And then you get frustrated, and then you're looking for another home run, which causes you more and more losses. Versus if you kind of stick to what whether it's a particular sector, whether it's a particular market, whether it's FX or crypto or equities, it'll go a long way once you develop that skill set, and then maybe you could start branching out into other markets. And I think to our credit, this is something that our community does pretty well. Is we don't really give people the kind of like hopium stock picks, like, hey, buy Nikola, which is freaking up like, what is it, like 400 or 500% or something ridiculous.
Yeah.
We're not telling people like, hey, from here, all this stock is going to do is go up higher. I think if it goes up higher, whatever, right? We don't really know a whole lot about it. If it goes up higher, then that's a missed opportunity. But if you focus on the companies and you focus on the assets that you actually know and you trade those well, then you could start building that compounding wealth.
Yeah, totally agree. Just to touch on the options side, for anyone who is trying to play options right now, it's really a tough game. I got to tell y'all, unless you guys are willing to bet where they expire this week or next week, I'm gonna let y'all know. I don't even need to look at the options you're looking at. They're probably going to be overpriced, and you're going to get into situations where the stock will go up. Like, let's just say you have a call. You may have bought it today, and the stock may end up going up from now till 2 weeks. But the premium that you guys bought it at, the stock has to go up a certain rate for it to be justifiable. Otherwise, the premium is going to end up coming down even as the stock's going up. So for anyone who's trading options right now, I haven't even, I'm like a true options guy. I'm an options junkie. I think I'm extremely good at options. And I just got to warn people, because I've had a lot of people come up to me and ask me about, should we buy options, all this. I don't know where this hype started to come from. It just happened like a week ago. And I just got to tell y'all, like, I've been looking at the options landscape, and it's very tough. It's very tough to find very good opportunities that are not going to, like, blow you out the backside. Honestly, like, you're going to pay too much for uncertainty in terms of future volatility. Like, it just keep that in mind. If I were trading options, I would really stick to the low cost options that expire, within a week or 2 weeks. If you're very good at technical analysis, you can kind of do support range type options trades. But for the most part, everyone needs to keep that in mind, that when you buy options at this point in time, because of what happened Thursday, when we had that 1,800 point drop, that completely reset the options market on that day, because premium spiked to an enormous level. And so since the market has kind of bayoued and come back up a little bit, the premiums have come down to a fairly fast degree, but I still think they need to come down more before you start buying a month, 2 months out. So I just wanted to touch on that, because I think you said something about options.
Yeah, no, that's a great point, because the one thing about options and some of my strategies are, of course, we know, first of all, the things to watch, whether it's individual companies or assets that we trade, and we have a good amount of technical knowledge to also understand if if an asset is overextended to the upside, or if it's just coming down to a nice smooth retracement level, whatever, right? I think a lot of people tend to look at options as what is the next green thing that is doing really great. And then once they start seeing, oh, well, Nikola options or Roku options are up 200%, 300%, they think, well, this is a time to get in. Well, it's not. You already missed the boat on it, So effectively, you're buying the top. You're bailing out someone else out of their option to sell.
I mean, yeah, in a certain sense, it is kind of like that. But I want to give like an explanation that I just saw today. You and I were talking about these Roku options yesterday that had just spiked up considerably while the stock was up 12% or so. And now you would think, okay, the stock is up 12%, the options should be up to a fair degree. But the options that Amal was telling me about, they were, I think, for 240, the stock was at 120. These options expired within a month, and the strike price was at 240. And the movement in those options, I think, was a 600% move. That does not make sense. Even with a stock moving 12% to the upside, like, it just should not have made sense. And then when you saw today, I think at one point I checked those options again, and the stock was down maybe 50 cents. but the options were down literally 30%. So that goes to show you how much premium goes baked in. I guess they baked in some more towards the end, but as soon as the stock did not justify continuous momentum in terms of high volatility, you see how it was kind of flat. It was, I think it was maybe down 50 cents or so, but the option price themselves were down 33%. So you're going to get caught in a lot of those types of premium situations where you'll think you're buying something because it's gone up hot and it may continue to go up. But as soon as it starts to even slow down a little bit, you will see the price of the options and the premium just drop significantly, and it'll hit you like an earthquake. Like it'll just come out of nowhere.
Yeah. Uh, I was telling the members the other day about, one of my option strategies. And again, this is in an environment where, I understand that the implied volatility and the premiums are not extremely high. So my option strategy is look for, first of all, obviously a good company that has, possibly a good trending chart. So it doesn't mean like, you trade into an option that has a chart that's literally just going sideways. If you're seeing a company that has, a nice up move and it looks like it's ready for a breakout, okay, that's the first thing that you want to see on a chart. Number two, what you want to do is you want to see what kind of movement that stock could do if it does start breaking out. My typical, generic percentage move is like anywhere between 7 to 12%. Okay, so that's from the point of breakout. So if, let's just say Roku was not breaking out today, okay, from here, I'm saying that, okay, well, tomorrow or the day after, I'm expecting a Roku breakout, 10% higher is, that's about 129 or so. Okay, that would be the strike that I would pick. And I would pick that strike for a month out. So this way, let's just say if Roku does break out in the next 3, 5, 10 days, I have a good amount of cushion in terms of my theta for my expiry of my option. And I get to capture the volatility of that option and then sell out of that before it comes anywhere, even, let's just say, near my strike or near my expiry. That's just one strategy that I wanted to explain to the members who are watching right now. It's something simple that you can utilize, but you obviously need a bit more background knowledge on the company itself, maybe basic understanding of technical analysis of, if you're actually going through a breakout mode or you're consolidating or what.
Yeah, I think that's a great strategy. In this environment, because we have elevated volatility, I would say if you're able to, I don't think many people are able to. Like when I was talking to some of my friends, they weren't able to do this type of option action. But if you can sell a call or sell a put, because it has higher premium, you want to go ahead and capitalize on that. Because if the stock starts to be flat, you can end up making money because the premium should come down even if the option is flat or goes the opposite direction of that option. So selling calls or selling puts is the great way to combat the high premium environment. And then another trick that I like to use is if I'm going to buy options, I usually like to wait till after the earnings date, because if you notice, once the earnings date comes and goes, the implied volatility significantly drops, starting from the earnings day, and it'll usually drop for maybe about a week or so, 2 weeks or so, and it'll usually bottom out maybe a month and a half before the next earnings date. And so when you kind of get it, when it bottoms out, that's when you get the options. That's when you can buy like straight up call options with little premium that will start to see an elevation of premium as they approach the next earnings date. So that's another strategy that you could use in order to take advantage of premium that naturally comes into an option as a result of the earnings date coming closer. So that's just something I would do in this environment because it's very tricky. So you just want to use those external factors to your benefit when you can.
Yeah, that's a great option strategy as well. By the way, so I wanted to talk about this a little bit, with our viewers who are watching right now. I've talked quite a bit before about how, there's a decent amount of correlation that goes hand in hand with the S&P 500 and Bitcoin. And sometimes those two markets are not really correlated, but sometimes they're, almost tied to the hip. And so for the last kind of several days or, basically since the end of May, what we've been seeing is a very, very tight correlation between the S&P 500, which is, let's see here. I'm trying to see the S&P 500, which is the black line chart right there, and the orange right here is Bitcoin. And so if you kind of lay those onto one another, you could see how tightly correlated they are. You can even see the dip that Bitcoin had and the S&P 500. Let's just say if Bitcoin is somehow telling the future of tomorrow, the S&P 500 should also at least have a down day tomorrow, or at least, pull down a little bit and then possibly push back up tomorrow if Bitcoin is going to push back up. So this is a kind of correlation, for the viewers who are watching right now. I've talked about this over and over again. This is why we have the discussion of the stock market and how important it is for the weighting factor of how Bitcoin moves, because undoubtedly, Bitcoin definitely moves well in a risk-on environment where investors and traders alike feel a little bit more comfortable taking that risk into a high-risk asset like Bitcoin. When that's not the case, okay, when you don't see that kind of high-risk environment or you don't see investors wanting to take that kind of risk, what you see is Bitcoin dropping pretty much like any other shitcoin like this in March. Because in March, when you had the heightened fear, no one thought of Bitcoin as, an asset that they want to own 1 year out or 3 years out or 5 years out. They were just saying, I just need to get out of this to, create some liquidity in my own pockets. That's it. And so we're kind of coming up to that environment, in my opinion, that if Bitcoin starts breaking, some key levels, I would be really interested to see if the stock market, especially the S&P 500, starts breaking its key support levels. It's fascinating. We talked about this a little bit, right? I think I had explained to you that even the tops and the bottom of Bitcoin have kind of led S&P in a way. I'm not saying that, well, the S&P 500 follows Bitcoin, but it's just an interesting correlation nonetheless.
Yeah, no, I think it makes sense too in regards to the sentiment behind high risk assets. It's been a little bit different as far as what a high risk asset is in this day and age, because you could look at something like the software stocks and consider them a high risk asset because they're trading at definitely historical valuations, but they're not a high risk asset in my opinion. I guess at this point, the market sentiment favors the companies that are going to grow exponentially from probably 2022 and beyond. I think that's the trend. Sometimes I don't know if it's 2021, but definitely 2022 and beyond. If you're growing double digit and you have a clear growth picture, people are willing to buy you now versus the losers who are either pulling their earnings forecast for the year or showing a lot more uncertainty. But you're exactly right. I think it makes sense that Bitcoin may lead sometimes, but there are also different factors like the liquidity in the market and everything that could be the differentiating factor as to whether or not the stock market actually follows
yes,
the Bitcoin
same thing with dollar strength or dollar weakness or bond markets. There's obviously a multitude of factors that impact markets, and neither you nor me nor Warren Buffett will ever know exactly why a stock or a particular market is moving, as aggressively or when it's going to move up or down, right? That's just a fact of the markets that we kind of have to accept. Is it's impossible to know what's going to happen tomorrow.
Yeah, I think the best we can do on our end is just try and figure out when the volatility should hit, because a lot of times like technicals will give you a good especially short-term technicals, if you know how to read them, they'll give you a good picture as to when volatility will hit, but there's no real indication as to whether or not it's going to go to the upside or downside. That's the
Right.
problem. That's the problem with technicals, but it's just how you position yourself. You just gotta position for both ways sometimes.
Yeah, exactly. And obviously you have to manage your risk too.
Yeah.
Going along with that, so Johnny B, he's a viewer on YouTube. He's asking a question. First, his comment is, first of all, how bearish are we on the S&P 500? Number two, it seems like we've been saying forever that tomorrow will be the big day, next week, next Monday will be the big day. So why is it that analysts and traders like you or I say this kind of commentary? And why is it that we have to kind of balance the way we talk about the markets? I wanted you to answer that because it's easy, I think, for someone on the outside looking at us talking about, well, tomorrow is going to be a big day, and we could see a pullback or we could see upside. But there's a lot of, I think, research and behind the curtain decision making that we go through when we say that. And I wanted you to explain that a little bit and answer Johnny B.
Yeah, no, that's a great question. First of all, I'll tell you off the bat, anyone who kind of does say things like that, like the market's going to go up a lot or the market's going to go up down a lot the next day, 99% of the time, don't trust them. like,
Yeah.
like what I'm telling you, there are a lot of factors that I look at in terms of equities in multiple sectors, equities ranging from large cap stocks, stocks that are fundamentally solid but are trading at a discount. There are many different movements that I spend the entire day from 8:30 where I'm at in Texas to 3 o'clock just spending looking at these different movements. And you start to get a certain feel about where the market's going. But except for right now is very choppy. As I've been saying for, I want to say maybe at least 2 days, the choppiness has really resulted in kind of like a directionless market. You'll have stocks be leaders for one day and then kind of take a break for the next day and then go back to being leaders another day. It's not really giving you this pull. But right now, what we're seeing in the market is a disparity between the large cap kind of value sectors, and the tech sector specifically. So if you guys noticed, the tech sector was up. Did it close up today?
Let me see.
It was up for pretty much the majority of the day, but I don't know after the last swing. I don't know if it closed up. XLK.
No, down a little bit.
Okay, it was pretty much flat, but like the Dow itself, I think was down around 200 points. And you start to see this disparity, and that's another sign that volatility will be coming. When you start to have this split between either, at this point, it's literally just tech leading everything, and then small caps really headed down today. Industrials took a small beating. Financials looked terrible. I mean, financials literally broke down. Some of the key leaders broke down today. Wells Fargo was awful. I think Citigroup barely closed above its key support level, but financials and energy are also looking bad. And when you see a lot of these sectors break down, but you have still this one giant sector, the tech sector, holding up everything else, at some point, something will give. Either the tech sector will be enough to buy you some time to where buyers will start to step back into the value sectors like we saw a couple weeks ago, and you had this huge volatile move to the upside, or it's going to end up not having enough weight and it'll come down with the rest of the sectors. So, to answer your question, yeah, there's a lot. Like, I probably shouldn't even say the market's going to go down tomorrow. That's just my own personal thought based on what I'm seeing. But like you said, it's not really that. I don't think it's really that helpful to say things like that. But for the most part, it's all about trying to figure out volatility. And I think that's what technical analysis is really about. It's about figuring out when the volatile times will come and to be prepared for those specific moments.
Yeah, and another thing, I actually don't think you said the market was going to come down. I think you said it was going to be a big day. So
yeah,
and again,
I don't know what I said. I probably said something like that.
So I understand questions, like Johnny B's question, where I think oftentimes, we get stuck in, at least in Bitcoin, we've been stuck in this sideways trading range for like what seems like an eternity, because it's very uncommon for Bitcoin, right? I think most traders, especially in Bitcoin, they expect volatility. They crave it. They need it every single day. And when they see ranging environments like this, no real breakouts or breakdowns, it bores them to fucking death, Yeah. And when people get bored, I think they start either criticizing the people who have a balanced approach, or they start, or they start criticizing the asset itself for, being Ponzi or, just a garbage asset that's not really doing anything. And the fact of the matter is, you nor I, we don't have enough money or power to move these assets. It's the real players in the market that are behind them that have the ultimate power who can do that. And all we can do is hop on for the ride, for whether it's an up move or a down move. But the rest of the time, we're just waiting. We're like, fish in a pond, just waiting for something to happen. And that's it. Uh, so
Yeah.
so so to answer, Johnny B's question is, yeah, I mean, listen, we're in a range for Bitcoin. We're in a what seems to be an ascending, channel, or a nice uptrend in S&P 500. But the clues that Faisal and I look at to tell us that tomorrow could be a up day, could be a down day, should not be discredited as, well, wait a second, it only went down like a percent, or it was a flat day, or it went down then it went back up. Well, yeah, 2 days ago, like when we were down here, you know, Fed Powell came on. What was it? He basically announced that, well, now we're going to start buying individual corporate bonds. Like, how the hell am I or Faso supposed to predict that Jerome Powell, with his hand on the green button saying buy, 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 is going to just start announcing to the world, like, hey, I'm just gonna let me see how I can fuck with investors today. You know?
Yeah, no, it's like that's true. An event can come out of anywhere, but still, like excluding the events, there are still like even when you have an event like we had yesterday, the infrastructure spending and everything, it was a fantastic news day. You had the retail sales up quite significantly, the 5G situation between China starting to get figured out, and you had the infrastructure spending tweet come out. All of those were significant news and very positive news, but the day itself was very mechanical in its selling. Like I get, exactly what almost said. Fed can come in and say something great, and all the technical analysis that you did before is kind of out the window for a couple of days. But there is still a lot, and this is what I try and tell people who are aspiring technicians. There's still a lot of mechanical movements, even on the days that they seem to be very event driven. And by mechanical days, I mean they hit support levels. They kind of don't break out as much as you think they would. Like after the news we got yesterday, you would expect this market to really start to roar. You would expect industrial stocks to really hammer hard for the next couple of days, considering they are the one sector that's down the most, but they're not. And it's because this is how the market moves in kind of mechanical processes. And so even though you can kind of say, oh yeah, it's an event, I kind of, why try if an event can come out of nowhere and kind of wipe you out. That's not the case in this market, and I think it may have to do with algorithms, it may have to do with something else, but almost every day for the past, not every day, almost for 95% of events that have come out in the past year and a half, 2 years, a lot of them have been mechanical. Whether it's bad news, the selling has been mechanical, very to a resistance point. Buyers step in, come back up. They hold that resistance point till the end of the day, and then they'll wait for the futures to kind of drop below that resistance point or bounce it up or whatever. And so it's really a different environment that we're in right now. But I really don't want to get people like to think that, oh, there's no hope either to make money on the short side or long side, because things are there are definitely opportunities everywhere, especially on the days that you don't think there will be. Like there were definitely short opportunities on the day that Powell came in or and said he was going to buy bonds or something like that. That may have not been the day to short, but short opportunities will be created from that because not everything will always go as you think it will.
Yeah, fair point. Um, how do you think the India-China conflict will affect markets? One of the question.
I don't really know. It could. I actually don't know. I don't have enough information. I haven't read up on that. I haven't really thought about it that much to give a good enough opinion on that. Sorry about that.
Yeah. So I could comment on that a little bit. So there's I think a Barron's or Bloomberg article that was talking about the um, India-China conflict on the border. So basically, right now, just like the past several years, what's happened is there's been a bit of escalation in China trying to put out soldiers on a specific piece of land that they're trying to, I guess, annex or capture from India. And I think India right now is definitely in its own defensive posture. But with those two big economies on that side of the world, I would probably figure that just in case something does happen there, I think there is definitely going to be a pretty rocky road ahead for global markets, because those are some large consumers for a lot of the imports that happen all around the world from many other countries that are exporting. But as of right now, I still, from what I can see, it's in large part just noise. And this is, again, if you're familiar with India-China conflicts, it's actually happened, pretty much every few years. Doesn't really escalate to anything. But then again, 2020 has already been pretty freaking crazy. Like anything could literally happen. But let's just not hope for a war, because a war in that region kind of brings up a lot of conflict, because it brings up a lot of alliances, possibly a lot of enemies in the West, maybe even possible players like Russia coming out. So you do not want that conflict to escalate, is my point. Let me see here. Let's see. Johnny B says, just when I look at Bitcoin, I see very clear patterns, triangles, channels, wedges, but S&P 500, not so much. Yeah, well, the S&P 500 is an index, so it kind of encompasses, 500 companies. Like, you're never going to get the perfect kind of patterns or wedges that you see in individual assets like Bitcoin. I think, to be honest, the asset Bitcoin is much better traded from a technical perspective than if you look at the S&P 500 or the SPY ETF. Let me see. Guys, make sure you hit the thumbs up. And again, we have that 50% discount going. The link is below right there in the YouTube description if you guys want to check it out, or you could just come join the free Discord, the Discord membership. Let me see here. Are there any questions? Okay. Could I look at Poe? Let me check out Poe real quick.
Poe. I can't find it.
Oh, no, it's a random crypto.
Oh, I was like, I'm looking at my stock stuff.
Yeah. I got to be honest, like, guys, I've largely stayed away from altcoins because I think they're dangerous assets in the current environment to trade. But, if I were to just look at it from the technical perspective, you could clearly see, this descending trend line where price actually broke out of it. Not only did it break out, it consolidated and is now pushing up and out. So your first targets are, just your simple like SR levels, right? Obviously this one being the first one, which Poe pretty much already hit, and then way the heck up here. By the way, Poe does look good on a daily time frame. Like, it consolidated for a good almost half a month or so, and now it looks like it wants to break out. If you want to be safe, you could wait above this 25 Satoshi marker and then take that trade to the upside towards 34 or 41. Okay, let me see here. Let's see, what are the biggest imports of China or India? I have no idea. So for example, I was reading an article today that China and Australia have a pretty big relationship on the iron ore side. And so Australia kind of disrupted the relationship because they started to get into more iron ore mining. And then possibly, their whole, criticism of China did not sit well with the Chinese government. And so, again, these kinds of disruptions are things that you want to pay attention to. What are some big consumer products of India? I don't quite know, but I do know that when it comes to American products, I'm sure that there's a good amount of products that go from America into India, whether it's cars, electronics, all kinds of stuff. But yeah, don't quote me on that. Let's see here. All right, guys. Well, I don't know if there's any other questions, but if not,
I'll give a little bit of 2 cents real quick, because I'm just doing some work real quick. I want y'all to watch a couple points for tomorrow. So the biggest things that happened today that I think are leading me to assume that tomorrow's going to be a big day were what happened in the energy space and this financial space and the small caps. So XLF is for financials, which what you guys should watch. XLE is what you guys should watch for energy, and IWM is what you guys should watch for small caps. Now, the lows that these stocks or these ETFs, XLE and XLF are both ETFs. So the lows that they made, I want to say, what is it? Where is that? Okay, 39. Okay, so I want y'all to watch these prices for tomorrow because these are going to be the leading sectors that I think will end up leading the decline and could eventually be the ones to pull down tech. And if they start breaking down, I think that's your sign to get out of the market. I would be watching XLE to hold $39. I'd be watching. Damn, see that it did not close above today. I'd be watching XLF to hold 23.30, and then I'd be watching small caps to hold 139. So all three of these, I call them indexes, but two of them are ETFs on two sectors, and one of them is a small cap index. All three of these should be watched heavily tomorrow, especially because they saw the most weakness today, not even just at the close, but they were showing significant weakness throughout the day, which was very interesting to me because as we've had this sharp spike in the last maybe 2 weeks, 3 weeks, these have been the sectors that have given the market the most juice. And not only that, the breadth of the market was really increased because you saw these value sectors participate at a heavy rate. And when you start to lose that, I think that's going to be the first real crack that this market is ready to come down. So just to give you all something to watch for to tomorrow that I think will be of value. And then two stocks. I want to give you all two stocks real quick that I'm looking at personally, just in case the market ends up showing me some strength on the long side. So I like Edwards Lifesciences, and I expect that stock to hold at least. You can try and get it at this is not financial advice, by the way. You can try and get it at I think I may try and pick it up at around 68 and a half. Only if the market holds, that is. I like what I'm seeing from the medical instrument sector. I think a lot of them are showing significant strength. A lot of them showed strength today. Boston Scientific, Abbott Labs, Illumina, just Edward Life Science is a great fundamental company. It just has not performed well, which is exactly what you kind of want to see for a stock that you want to get into. It hasn't run up as much. And then the last one is Okta. Now, I've been talking about this stock for a long, long time. It's been a big software cybersecurity leader of mine, and it recently just bottomed out. It's starting to really chug back up again. And I think if you're someone who's looking at safety in terms of trying to find a software trade that can withstand any type of coronavirus effect, Okta seems to be the leader, one of the safest leaders, in my opinion. They have some of the best cybersecurity technology, and while they may be an extreme valuation, like if you're a fundamentalist, you'll probably look at this stock and think I'm crazy. But just based on the momentum trends that we're seeing, software is not a sector you want to fight, even if it's overvalued. So Okta is a name that I like. And then I think I was saying that Sunday, Blackline is still a very good company. It's still, I think, pretty low compared to where these other software stocks are trading at. So those are three stocks that I would look at just in case the market starts to shore up tomorrow.
Perfect. Well, looks like our viewers got their money's worth today, I hope.
Yeah, I hope. Those are just some things to keep an eye on. And, even if you're not going to get into them, I encourage y'all to just at least follow us. At least follow some of the trades we're doing, because we're not the type to give you the next Nikola or tell you to buy Hertz or whatever. No, we really dive into these companies, look at their balance sheet, their fundamentals, compare them with their peers and relative performance, and try and figure out which companies are the ones that have not moved but should move sometime in the near term. It's not going to be a 20-30% jump, but you'll get maybe 7 to 10%. And I think for the members that are a part of our community, I think they can attest to that at least 7, a lot of our trades go for at least 7 to 10%.
Easily.
Yeah, easily. I mean, it's really not that bad.
I think we were clearing some options trades, almost 50, 70, 100 plus percent.
Oh yeah, I think I had an option trade. The second option trade I did was on Raytheon. That was crazy. That went up. That that went up like over 1,000%. But
Yeah,
that's not why we're here. We're not here to tell y'all that's going to happen every time. But
exactly.
yeah, definitely those are opportunities that do come around, and when you see them, you do have to take advantage of that. And I think we have the really great tools to capitalize on those opportunities.
No doubt, no doubt. Well, thank you guys so much for joining again. If you're not part of our membership, make sure you come join the free side of Discord. Check out our gains reviews right here, or just come hang out on the free side and just hit the thumbs up on the YouTube video. All right. That's all we got for today, guys. Thank you so much. Keep your stops tight. Don't be trading those penny stocks. I see that question in the chat. So we don't trade penny stocks, unfortunately.
Yeah, sorry about that. Yeah, I can't help you there.
All right. Well, that's it. Y'all take care, and we'll catch up with you guys Friday. We might do another live stream Friday. All right. Take care, guys.
Peace.